Hello students, welcome to my channel. Today we are going to see June 2023 question number 2a for 10 marks. It goes like this. Following are the balances in the books of Dheeraj Enterprises. The machinery account as on 1/4/21 is 12 lakh. Provision for depreciation 4,65,000. That is also as on 1/4/21. And on 1st October 21, the machine which was purchased on 1 April 2018 was for 2 lakh, was sold for 1,10,000. On the same date, another machine was purchased for rupees 4,80,000. The firm has been charging depreciation 10% per annum on WDV method of the machine every year. So they asked you to prepare machinery account, provision for depreciation, machinery disposal account. Whenever you see a question like this, provision for depreciation account, it means that in machinery account you are going to maintain the balance, the cost which was acquired. We are not going to reduce the machinery account machine value by depreciation, so that the amount available as on 1/4/2021 is the purchase cost of that machinery. Here the depreciation is not deducted at all, because when you prepare, generally what you do, depreciation debit to machinery account, so the value of the machinery comes down. But here they are maintaining provision for depreciation. Then what would be your journal entry? Depreciation account debit to provision for depreciation. So this depreciation getting accumulated in a separate account, provision for depreciation account, and the machinery will be appearing in your balance sheet at its original cost. Hope you got it. Now we will prepare all the three accounts, whatever they have asked us. So let us start that. So machinery account, it is showing on 1 April 2021. It's so thick. I'll just change the thickness of my pen. Okay. So now on 1/4/2021, the machinery showed to balance brought down, showed a balance of 12 lakh. But we studied there was another machine for 2 lakh rupee which they have sold. So let us take it as machine number 1, because it is always better to have a breakup of that. One machine they are having for 2 lakh. So the total cost of the machinery available is 12 lakh. So the balance figure is 10 lakh. Let us take it as machinery 2. So M2. So the total balance available as on 1/4/2021 was 12 lakh. And they say that on the balances, let us write, then we will come back to this. So next they say that in the provision account, the balance available, that was also on 1/4/2021, it was 4,65,000. Provision means immediately you should understand that will have a credit balance. So we are writing the balance brought down on the credit side by balance. I am writing it in short, by balance brought down. This 4,65,000 also we have to bifurcate into M1 and M2. I am writing here. We will do the bifurcation later. So the total provision for depreciation for both the machines available up to 1/4/2021 is 4,65,000. So now we have put up the values. Now they say that on 1/10/21 the machine which was of 2 lakh rupee is sold. So now what we will do, we will go to the date of 1 October 21. They have taken out this machine, that is machine number 1. That will be transferred to machinery disposal account. Machinery disposal account, because we are going to dispose that machine. Machinery disposal account. This 2 lakh we will be taking out from this. This is machine number 1. So machine number 1 has been taken out. So let us go to the machinery disposal account. Now here on 1 October the machine has come to this account because we are going to dispose it to machinery account. M1 has come here. The value is 2 lakh rupee. Next they say that on the same date they purchased another machine. So now they purchased on 1 October 21 another machine. So what would be your journal entry? Machinery account debit to bank account. So you are going to write to bank. We have bought one more machine. I am writing here the machine number 3 for 4,80,000. That's it. We are not going to do anything in this machinery account. So we can very well close the machinery account. So we are going to close the machinery account. 16,80,000. The machinery is here. Now here this they have asked us to close the books on 31st March 22. So on that day the closing balance of these machinery were by balance carried down. You can always write here M2 is there for 10 lakh and M3 is there for 4,80,000. I am writing it here 10,00,000 and you are having a new machine of 4,80,000. So what is the closing balance? 14,80,000, and 2 lakh machine has been sent to disposal account because we are going to sell it on 1st October. 16,80,000. So you can always write here. It is a better practice to write to balance brought down here 14,80,000. The breakup is also available. Now what we have to do? We have to prepare one working note to calculate the depreciation because we got the total depreciation for both the machines. Now we have to sell machine number 1. So we have to find out the depreciation till 1/4/21 and then till the date of disposal, the depreciation, so that we can take the balancing figure. After subtracting the depreciation of M1, we will be automatically getting the depreciation for M2. Hope when you do it, you will be able to understand. So now we are going to do one working note. You can write one number. Now the cost of the machine purchased on 1/4/2018. You know that the depreciation is charged from the date of the machinery put to use. That is generally the date of purchase. So this machine is M1. We bought it for 2 lakh rupee. So on 31st March, we would have charged depreciation. Depreciation for the year, for the year 1819. That is up to 31st March 19. We are charging 10% WDV. So what is the depreciation? 20,000. So now the book value as on 1/4/2019 is 1,80,000. So you can always write the book value as on 1/4/19 is rupees. Here you put 1 rupee sign. So rupees 1,80,000. Now we have to charge depreciation up to 31st March 20. 31st March 20. Again it is 10% WDV. So now that will be charged on 1,80,000. That is 18,000. What is the balancing figure? 1,62,000. 1,62,000. You can write WDV value or book value. Book value as on 1/4/20 is 1,62,000. We have to come up to 1/4/21, then up to the date of sale. So now depreciation up to 31st March 21. Again 10% WDV 16,200. Now the book value is 1,45,800. 1,45,800. So up to this we have to take it to that provision. We will do it fully. So now depreciation, this is the book value as on 1/4/21. The book value of machinery is 145,200. Now depreciation 1/4/21 to October 1/10/21, because we have disposed it off on 1 October 21 for 6 months, 10%, 6 months, 10% WDV. So this comes to 7,290. So what is the book value now? 1,38,510. Now the book value as on 1/10/21 is 138,510. We have sold it for, we got the amount in our bank 1,10,000. 1,10,000. So the book value was more. So it was sold at a loss of 28,510 rupees. So this will go to your P&L account because it is a loss. So this will go to your P&L account. Now see here, up to this date 1/4/21, we have charged depreciation on this machine 20,000 18,000 and 16,200. So the total comes to the depreciation up to 54,200 up to 1421. So now we have to go to this. Now the breakup is here 54,200. This is 20,000, 18,000, and then your 16,200 up to that date. So the balancing figure, total depreciation is 4,65,000. So for M1 it is 54,200. Then what is the balance? That is for your M2, 4,65,000 minus 54,200. That gives you 4,10,800. Because we need the breakup so that we can take this to disposal account. Now we have to charge depreciation up to October 21 for M1 because we are disposing it. So by depreciation account, because our journal is depreciation to provision for depreciation account, this amount is 7,290. So now the total amount 54,200 and 7,290 will be transferred to your machinery disposal account plus 7,290. That comes as 61,490. So we have to take this amount to machinery disposal account. This we are removing it on 1 October 21. Date is also very, very important when you do your machinery account. Now we have to go to the credit side and write here 11021 by provision for depreciation we have transferred 61,490. Now we know that we have disposed it on that same day, so we got the money by bank, we got the money on disposal 1,10,000. So what is the balancing figure? Already we have worked out 61,490 plus 1,10,000. We got it, but the book value was something else. So we got we end up with a loss of 28,510. This you can write work note 1 here, and here also you can write work note 1. So by P&L account. So this will go to P&L account on the debit side because it is a loss on sale of machinery. You can write it very well here, loss on sale of machinery in the bracket. Okay, so this account is now closed. This side it is 2 lakh. You can total it. This side also it is 2 lakh. So your machinery account is over. Your machinery disposal account is over. Only one account is left out. That is your provision for depreciation. Because they have asked us to close the books on 31st March 22, you have to book depreciation for machine number 2 and machine number 3. So for this, you should know the book value for machine number 2. That you have to work out here again. So write and work note 2 now what is the book value as on 1/4/21 for machine number M2? Your book value was 10 lakh rupee. The total depreciation up to 1/4/21, we have already taken that by calculating the machine number 1. We subtracted from 4,65,000. So we have calculated that 4,10,800. So now you got the WDV value, or you can say book value, as on 1/4/22. 589,200. Sorry, 1/4/21. So now you have to put depreciation up to 31st March 22 for 1 year at the rate of 10% WDV. Okay. So what would be your depreciation? 5,89,200, 58,920. 58,920. So let us take this into our provision for depreciation account. So now the provision for depreciation account, machine number 2, 1 minute, it is 58,920. Okay. Now machine number 3 we can calculate here itself. It was purchased on 1st October. So here depreciation from 1 October 21 to 31st March 22, it is 6 months. So what is your 4,80,000? So for full year it is 48,000. For half of the year it is 24,000. So here you can write work note 2. For this machine you can give the calculation here. 4,80,000 into 10 by 100 into 6 by 12. You can just show it inside the column properly. Now we will be totaling the total depreciation is 555,210. So we have sent to machinery disposal account 61,490. So now what is the balancing figure? So let me take it. 555,210 minus 61,490 is 4,93,720. This will be your balance carried down as on 31/3/22. To balance carried down 4,93,720. So the total appears here as, you can make it in a proper way. So 555,210. Again you write here by balance brought it down, because this will always have a credit balance. Provision will always have a credit balance. You write here 493,720. Like this we have completed all the 3 accounts. If you like my video, please like, share, and don't forget to subscribe and share it with your friends so that people can enjoy. Thank you.